Good morning, hello, and welcome to Credit Connect's Connected News webinar series. My name's Colin White, and I'm the founder of Credit Connect's news site, which provides media content for the lending, credit, and collection sectors. Today's Connected News series aims to discuss technological innovation and strategies within credit and collections. And in this first edition of Connected News, we will examine the technological changes and challenges caused by the COVID-19 pandemic. In today's discussion, we will also reveal the Credit and Collections Technology Awards shortlist. However, before we begin our discussion, I'd like to make it clear that we intend to make the webinar as interactive as possible. So please feel free to use our event dashboard. Hopefully you can see on the dashboard, and you can see different tabs. So you've got the Credit Connect logo, and then you've got an overview button, which provides the obvious background to the event today. You've got resources, so there are various links that you can see where you can view more information about Credit Connect, the awards, and also one of our guest speakers today from Debtstream. Got some details from them. And then you've got some presenter profiles if you want to see more details about all of us today. But also, more importantly, we've got the Ask a Question tab. So on there, if you have a look on that, you can basically click on that, and then you can obviously write your question in, and that will be shared with us, and we will, if we get the chance, we'll try and answer those questions, but we've got quite a lot to discuss today. So hopefully that will all become clear to you, and it's easy to use. So feel free to utilise that. So also, we're going to run a couple of polls today because we want to get your response and your thoughts on different thoughts on what's going on out there. So let me just find our first poll. Hello, can everybody hear me? Welcome back. Sorry, we had a technical issue there. Hello?
Yeah, I can hear you, Colin.
You hear me now, Matt? Sorry about that.
Yeah, I can hear you. Hear you, Colin.
We had some technical issues with our polls, so we may not be able to do them. Apologies for that. But what I'll do, I'll introduce you to Gareth Bailey from Debtstream and Matt Whale from Hoist. And if you could both, first of all, Gareth, could you give us an introduction to yourself?
Yeah, of course. Thanks, Colin. Hi, everyone. My name is Gareth Bailey. I'm one of the co-founders of Debtstream. A little bit of background about myself. I'll only cover probably the last 20 years of my career, so we don't go over too much. But I've worked in collections and recoveries for about 20 years now. I started my working life in collections when I worked at a company called MB&A. And in about year 2000, I moved from being a credit underwriter to managing a team of collections agents. In the day, we used to call them customer assistance specialists. And that was, I guess, my first role in collections. And I worked in operations for a period of time. And then I moved into more strategic roles. So ops strategy, communications, collection strategy roles. And I've been really lucky, actually. I've worked in quite a few different businesses along my career so far. And I guess I've learned a lot about how different businesses deal with and support customers in collections. I've been lucky enough to work in Barclays in the UK, Barclaycard in the UK, and also in Germany, in Arrow Global and CapQuest Operation, and Hoist across their group. So with my most recent roles, I've been very much focused on delivering digital solutions through the in-house teams of those businesses. And over the last sort of 5 to 7 years, I think, well, we've all seen, but I've certainly seen an acceleration in terms of the speed of change in collections, and how digital services have really gathered momentum. So the back end of 2018, I co-founded Debtstream, and Debtstream, I mean, obviously there's the information that people can download, but we provide digital solutions built, I guess, on our real world experience of what customers need in collections. And our platform is there really to, provide a highly configurable, really good user journey for customers who are in collections. So for organisations who are looking for digital transformation, they can achieve that, far quicker with our platform because it's pre-built.
Super. And you worked with Matt as well, didn't you, Matt? Matt, if you could give us a bit of background to where you...
Yeah, it's a tough act to follow. I'll try and live up to that level of expectation. So I'm Matt Whale. I'm Digital Performance Manager at Hoist Finance at the moment. So I've been with Hoist for 2 years. My role primarily is focused on transitioning us from being your archetypal contact center / analog centric organization into a truly digital first collections business. My background primarily is in application development and digital innovation. I was with global IT giant Fujitsu for 10 years, managing their innovation budget in their business applications division across Europe, Middle East, India, and Asia.
Sure.
And off the back of that, joined Hoist, as you said, worked with Gareth very closely in the development evolution of our customer self-service offerings across a multitude of our different territories. So probably most recognisable under our trading name in the UK is Robinson Way, where we manage debt that we've purchased that's primarily underperforming, non-secured, defaulted debt.
Excellent. Great. So I think we'll try and delve into this discussion today. So it'd be great, first of all, Matt, to get your thoughts on COVID, and obviously it's had a massive impact on all of us, but how it's affected your team and your company in relation to obviously what you do around collections.
I think in terms of how it affected our company, it increased our appetite for change. So we made radical business changes that we probably would not have considered, and out of necessity being the mother of invention, it drove us to do that to ensure that we could maintain business continuity. So within the space of about 21 days, we moved our contact center operation from being an office-based facility to being 100% home working, which carried with it significant challenges from operational processing, procurement of equipment, switching of solutions to management of customer data. And one that I think that as an organisation we're particularly proud of, with the expediency and effectiveness and accuracy with which we carried out that transition. I think more so from a team perspective, we were pretty much a hybrid team in terms of working from home and working from the office. So because of the very nature of digital development, of application development, that tends to be a very typical work pattern. So as a team, I don't think it has impacted as much. As an organisation, how we've changed and operated at a much higher level is night and day. It's been absolutely huge.
Yeah. And the same to yourself, Gareth. How have you? How was it?
Yeah, I guess from a...
Sorry, go on. Yeah.
No, I guess from our company perspective, from a day-to-day practical sense, we didn't experience a huge change really, because we were already, operating, remotely anyway. I think one of the elements we did see quite a big difference was how we go through or manage our sales process and client onboarding. So we'd normally try and have a mixture of, remote calls, but face-to-face was really important.
Yeah.
When you're meeting clients for the first time, or even when you're doing presentations, it is often really nice to just, be there, handshakes and all of those things.
Absolutely.
But from an implementation point of view, I mean, we've got 3 live implementations at the moment. We've had to adjust our approach quite a bit.
Yeah.
We'd normally spend a couple of days on site, which you can meet a lot of teams. There may be, teams or people that you didn't intend to meet initially, but through conversations you realise they're a really important connection. Yeah. And you kind of don't get that when you're sort of planning things remotely and you're having very structured individual meetings to go through a process. But to be honest, we've adapted and it's working really well.
Yeah.
I think we have found, I know we're going to talk about digital adoption, but the volume of companies that are approaching us now, engaging with us to ask about our services, has really increased, which is great for us. I know these are really tough times, and there's really difficult things happening. But on a positive, we have found that we have had quite a large increase in people engaging with us.
Yeah.
I think just on that, we made quite a big change. What we did is we implemented, or we started like coffee breaks, virtual coffee breaks. Yep. So knowing that it's going to be more difficult to go out and see people, we started these like half an hour every Tuesday morning, and we just invited people from collections operations to just join us as a place to, not for us to sell anything, and it's for us to talk about what we're finding difficult, what challenges we're experiencing, support each other with new ideas. And that's been a really, well, we hope, and I think the feedback we've got has been a really good format. And
I think that sort of support that you're talking about, Gareth, is key. And I know that looking at it there more from a B2B perspective, but from an employee welfare perspective, especially in, as I said before, a more call center driven analog business type perspective, where a predominance of your employee workforce is used to constant social interaction, close support, having management members around them to guide and advise, to suddenly being placed at home and often in combative potentially situations with a client on the phone that they're having to challenge about an arrangement. And in a skill set that they've not necessarily been trained to be able to develop and had to adapt and adopt very, very quickly. We've worked incredibly hard to ensure that employee welfare structure and environment was one that matured very, very quickly through constant management employee engagements, as Gareth was saying there, through touch points of conversation that do not have to be performance driven, more support driven, emotionally driven. What are you finding challenging? What are you finding hard? Where can I help and support you? How has your life changed as an individual due to suddenly have work thrust into your home, which is something that for a number of our employees was very, very new.
Yeah. No, it's definitely a hard thing to kind of deal with if you've got children and things like that. And I know a lot of people are baying for September to come around quickly.
Yeah, definitely.
Go back and stuff, but ultimately it's really tough to kind of take that to the next level, being someone who mainly works from home anyway, with the children thrown in the mix as well, and their schooling and fighting over laptops. Yeah. It's been hard work. So we were going to run a poll actually and asking people how many people were in the office today, but I think we're trying to take that onto LinkedIn today, because it's just been, we've got some kind of technical issue, which is one of the challenges of working from home as a we've just discovered. And it's just frightened the life out of me there. But no, we'll get through it like we already have. So that's all good. We're obviously all working from home today, unless you think we've got really good offices in the background. Bringing it on to our next question, I was going to ask you both, maybe I'll start with Gareth first on this one. How do you think COVID has created an acceleration of digital adoption? You've obviously seen more customers, but have you got any thoughts on that?
Yeah, I suppose the first thing is to think, to agree, do we think it has accelerated digital adoption? I think it absolutely has done.
We're here.
Yeah, we're here. It's what we hear about every day. I think if you think about the beginning of the lockdown, people were in a way forced to behave in new ways. So adoption is kind of the output, but is it a symptom or is it a true shift? And I think if you think about it now, different companies I was trying to get in touch with, I'd phone them and the message was, we're not taking calls, go online.
Yeah.
So you're forced into a channel. So I can remember when we started the coffee breaks, one of the things we talked about was we've seen a shift in terms of, various people were talking about the percentage of customers using online services, and it was going up. But at that time, I guess, we didn't know if that was a symptom of being forced to use new channels, or if people were genuinely choosing to use digital as their channel of choice. And I suppose now we're 6 months down the line. I mean, can you believe it's 6 months down the line? And I think we can make a much more informed assessment of digital adoption.
Mm-hmm.
And I think what it's found is people have now tried new channels, digital being one of them,
Yeah.
and they've liked it. So I think recent data we've seen is that 75% of people that tried digital channels for the first time during lockdown have decided that they're going to make it a permanent choice.
Yeah.
So that, I think, is a significant, monumental shift. And I think some of the stuff I've read that's out there suggests that in the first couple of months of lockdown, we actually jumped forward about 5 years in terms of business and consumer adoption of digital.
Mm-hmm.
So I think, 2020 will stand out for a multitude of reasons, lots of them not so positive. But one thing I think it will stand out in history is that it's the year that the world truly embraced digital.
Mm-hmm.
I honestly think it will stand out in these sort of school books, economy books, and all those things.
I think, you're completely right. You said if you want to foster adoption, you do it in one of two ways. You make the journey compelling, or you make other journeys restrictive. And I think that led to probably the first one that people that weren't original digital adopters doing was grocery shopping, because the restriction was there that meant that the other journey became more compelling. They felt safer doing that. And it almost becomes a gateway activity to then adopt further digital activities that they wish to self-serve from. And I think that massive uptake, I think it was something like 35% in the first 3 weeks from lockdown in terms of a surge of online grocery shopping, acted as that gateway to customers, combined with the fact that individuals then had more time to make themselves comfortable with a self-serve approach to other elements of their lives, to say, well, I've done it for my shopping, what else can I do it with? Let's spend time now to sit and explore. And suddenly that confidence grows. And I use this analogy a lot about digital adoption. It's not binary, it's not yes or no, it's layers of an onion. And you progress through the more and more challenging elements of your life that you weren't previously comfortable with adopting digitally, to start fostering a confidence to take the next step and take the next step. And I think as a result, with what we do, we've suddenly seen customers more willing to manage accounts, manage finances, and adopt the kind of services that we're offering.
Mm-hmm. Yeah. No, that's good. I guess. And from your perspective, Matt, like in terms of challenges for your collections operations, because we're obviously moving to the next stage now, where we're kind of entering a recession. Terrible to kind of talk about it, but it is kind of the reality now.
Yeah.
As payment holidays are going to end, as we're getting more detail on that now.
Yeah.
In different formats for different people. So technology is going to have a role to play. So what's your thoughts on that in terms of moving forward? Obviously.
I think the key thing in any such situation is customer engagement.
Sure.
And it's fostering an environment that a customer feels comfortable in engaging in, because the first thing that will often happen in the collection space when such a financial situation happens and people feel stressed, people feel pressured, is the easiest thing to do is put down the shutters and to close off those channels of communication with organizations such as us, who've often seen as a negative factor into their life, because we're trying to draw more money out of an already pretty dry well in terms of their finances.
Yeah.
Now, one of the easiest ways to foster that engagement, and probably the most frictionless way, is through digital engagement, through a self-service portal, through chatbots, through SMS messaging, because from a customer perspective, it's fairly unilateral. It doesn't feel that it's an environment where pressure can be exuded, where they feel challenged. So suddenly you open up an avenue of communication, of engagement, that from a customer they feel in complete and utter control of. And I think in a situation such as a recession in the collections, a world recession that we're trying to manage in the collection space, having a customer feel in complete control is very, very important, because then they will engage, because they know that they can manage on their own terms. And I think technology provides you that solution.
Mm-hmm.
Yeah, I think with government support schemes ending, and as you said, Colin, payment holiday periods coming to an end, I think there's this bubble of disguised debt that already exists. I mean, it's been around for a good few months, and that will emerge. And I think one of the challenges that collections operations will face is just the sheer demand, the volume of customers entering arrears across, lenders, utilities, other consumer-facing services. and the operational scale will be a big challenge. And I think digital being a very efficient and effective way to, help customers through journeys will become a more and more important element. We see it now, but imagine if you not double, but see a significant increase in the demands on your resources. It just magnifies the problem.
It's for me, it's about communicating options, and there isn't just one option. The option isn't pay or don't pay. It's about communicating options to a customer to say there is a myriad of solutions here of which you are in complete control of that can all lead to a positive outcome, but then giving the customer a digital engagement tool that allows them to manage and navigate those solutions very quickly, very simply, and very clearly explained.
Yeah, no, absolutely.
Yeah, I mean, no, I was going to say, another challenge, I guess, will be new demographics of customers that are struggling. So not just more, but customers that, not that we haven't seen before, but if we look at the way, propensity models or, comm strategies are built, they're based on historic performance. Well, if you throw a new demographic of customer into the mix, the way that we used to support customers or collect, on accounts will potentially be nowhere near as effective as it needs to be, or, as effective as it should be. So I think one of the challenges will be to react and adapt to new customer demographics and the way new customers, need and want to engage. And with that, I think to your point, Matt, comes this level of flexibility. Those of us that have been working in collections for a while, you have categories and populations of customers. They're my paying base. They're my nil payers. They're my sort of, in between, they paid 3 years ago, bit of a chance. Well, the reality is that we're going to need to become a lot more flexible in the way we define and manage customers.
Yeah.
Because this sort of binary view of you're a payer or you're not, I think will exist less and less as we move through to people that are having more sporadic issues. And I think from a collection toolset perspective, not just the journeys and the way that we support customers, from a toolset perspective, we need to think about having much more flexible ways of supporting customers. And that in itself will drive more challenges. So if you think about a time, at the moment, we do, reviews every 6 months, because FCA guidance says that's what you should be doing.
Yeah.
Well, every 6 months is probably way too long, because customer situations are changing much more frequently. So what if we said to every operation, you need to be doing reviews every 30 days? Well, the overhead to do that is absolutely huge. But if you can have digital solutions that can do that for you and do it in a really neat way that customers feel engaged with, also supports the business, that has got to be a massive plus.
And I think that's where your messaging changes. And that's where your messaging changes with your customer from repaying a debt to managing a financial situation. That it's management, and that encourages the customer, as you do with your banking, to go in and review it frequently, to look at the ups and the downs, to maybe flex a payment to fit your ever-changing dynamic financial situation at the moment. And I think we recognise that a large proportion of our customers do not live in a static financial situation. Income fluctuates for our customers often very wildly, depending if they're paid per hour, they're on 0-hour contracts, they work in an organisation such as hospitality and retail, which sees massive highs and low seasonality. So providing them with communication that makes them feel I am managing something here. This isn't a one-stop shop where I've dealt with Robinson Way, for example. I'll speak to you again in 6 months, because the reason they want to do that was the last time they spoke to us, it was such an arduous process of a 40-minute telephone call. Instead, provide them with an online solution that allows them to click, go in, look. If they need to change anything, they've changed. They've submitted their updated plan. It's saved. They've changed the payment method. They've clicked out again, all in the space of 5 minutes. Because that's what we do today with our banking apps. And that's what these customers will be used to doing. That's what we do with our mobile phone contracts. So we need to move into that space in the collections industry to give the customers that freedom and flexibility to feel that they can flex that plan. And I know that makes it very difficult then from a financing perspective in terms of forecasting of what we're looking to and curves and all of this sort of thing. But I think that if we're going to truly manage these customers and help them to get through these situations successfully, these are the kind of suite of offerings we need to be providing.
Yeah.
It's funny you made that reference to the mobile sector. I've worked in that sector myself, albeit on the media side, and yeah, they're so far advanced in their technology for obvious reasons that I think there is a plan called Flex Plan. Actually, I can't remember.
I can change my data usage, my minutes, everything with 3 sliders every single month, and at the click of a button, I can do that in 30 seconds. And this is the provision of solution that we need for our customers, because that's what they need to be able to do. And again, I use these analogies too much, and anybody from Hoist to be listening will be laughing. But I look about it is it's a journey between tram stops. You've got on the tram, you've received a text from us saying, when was the last time you looked at your plan? You're in, you look, you check that it's still affordable. If it's not, you've made whatever plan amendment that you needed, you've saved it, and you've got off at the next stop, and the pressure's been relieved. Because that's what we should be doing.
Absolutely, I agree. It kind of doesn't really. We had a poll that we were going to run, but we actually preempted this on LinkedIn, so I'm just going to go on to that if that's okay. So what we did, we just asked. It's only as good as my LinkedIn connections, and what we asked them was follow. Obviously, you can see it here, but following on from the pandemic and lockdown, where is digital technology now in terms of a priority for you and your company? And obviously, it's come through that there was a provision. I'm guessing the ones who are low, you would hope were already ahead of the game, I guess, in a sense that they already had the provisions, but I'm sure it was a priority before. But yeah, really interested in what we got from that. So that was just something else we did, but I think it kind of reflects kind of what we're talking about here in a sense. What I was also going to ask you guys as well, I'll start with Matt again, if that's all right.
Yeah, sure.
Do you think you can use technology to measure customer vulnerability? And also, what are the best ways? And can that, obviously, we're thinking straight away in terms of best customer outcomes. So kind of your thoughts on that as well, if that's okay.
I think the challenge we have here is that historically that this kind of customer information has been ascertained conversationally through well-trained agents who lead a customer through a set of very well-structured questions to tease that kind of information out of the individual. Because for some of these customers, they may not know quite how to articulate any vulnerabilities that they're experiencing, to explain them clearly and coherently. And it's how you digitize that conversation, how your customer journey leads that individual through feeling comfortable, but then understanding how to share that information with you through an online journey. And then how you capture, manage and utilize that data at the back end, to your point, how it then best forms what is the most appropriate customer outcome. But I think that the first step of that is how we truly understand from the customer journey how we're getting the customer to share that data and information with us. And again, it lends itself to chatbot-led type conversations. Look, we all know we're not a nation of form fillers. So the minute that you put 5 pages of click button forms into for a customer, every time they change a page, that's another reason for them to drop out of the online journey. So it's got to be a way that gets that information quickly, but also in the same level of depth if we're going to use that to best protect our customers moving forward. And I think that's a challenge. And I'd be quite open. It's something that we need to explore and do better at Hoist at the moment. And it's something that we are looking heavily into. We make use of a lot of chatbot technology. And it's proven very, very successful for us. Our chatbot in the UK manages almost 10% of our inbound traffic at the moment. And we're constantly building out those conversations. And I see that chatbot being the perfect example of a way to manage these customers through a vulnerability conversation. But it's work that I think probably as a sector online we need to get better at doing, because the go-to is 4 pages, 5 pages of forms.
Yeah.
All with very personal, invasive questioning that a customer may feel, I don't want to do this.
Yeah, I agree. I think it is an area that we need to put a lot more sort of work and focus in. I think one of the real difficulties with vulnerability is that people don't identify themselves as vulnerable.
I agree.
They identify their life situation or a life event. They don't put themselves in that category. So asking someone, are you vulnerable? I know that's a very blunt thing, but for instance, that's not really very helpful.
No, I agree.
I think the subtleties and nuances that are picked out through a person-to-person conversation are very, very difficult to replicate digitally.
Yeah.
But I think things like chatbots can certainly pick out elements of a conversation, so keywords, and help maybe, create some kind of soft trigger that would suggest, this is a customer that may be, rather than is absolutely defined as. But I think from web journeys that are, invisible to a customer, for instance, as in it's not a direct question, but it could be the way they're using a website. So if they're doing an income expenditure form, are they refilling out the same information over and over again and resubmitting? Is that an indicator of some kind of vulnerability? So I think, things like that we already have in terms of journeys, it's pulling through the data and then doing something useful with it.
Sure.
No, definitely. And I think the danger here as well is thinking that we can make this kind of activity fully online. I was very clear at the beginning, at Hoist Finance, we're looking at being a digital first collections business. I honestly do believe there will always be a place for human beings in the collections process to help manage, support and guide our truly vulnerable customers that an online journey just is not appropriate for. They need further help and support and guidance that journey alone cannot provide. So, it's how we delineate those different journeys at the start. Speech analytics is something such as a chatbot is a very easy way to do that, pulling out key language uses, terminology, phrasing that may identify stress factors within language that's being used that then route somebody straight to an agent. A lot of call centers use that kind of speech analytics already, very easy to replicate in a chatbot. But I think to think that we could completely move this to a digital arena, I think at this point is naive.
Yeah, no, definitely, I agree. And I think the other thing is, the other kind of technology that's kind of been muted about providing a solution or a part solution towards this best customer outcome and is open banking. So I just want to get your thoughts on that. Obviously, it's a great solution for lending. You can get mortgages put through. We're obviously trying to see the housing market, and the government's trying to stimulate at the moment to make it move forward quickly. So for lending, you hope that open banking is really providing a real difference if it's being used. There's some interesting figures out there about how much it's being used, but that's obviously great stimulus for lending. But what about collections? Because it's all right lending this money, but if you can't collect, so have you got any thoughts on that, on the open banking and collections kind of?
I think
I guess
it's a topic that I hear about most days, actually, and I think we probably all do in collections, and it's one of the key topics we've covered on our coffee breaks quite a few times. And it's really, we don't have any answers right now in collections, I guess. We've just got opinions. But I think it's probably fair to say we've still got a way to go before it's kind of trusted and is commonplace in everybody's day-to-day interactions. And that in itself is a big challenge for collections, because collections is tough. It's kind of the hardest, you're trying to sell the hardest thing in the world, because people, technically are in a tough situation and it's difficult for them to pay. I think one of the elements that we really need to work on is selling the value exchange. So, if I want to take out a lending product, if I'm asked to go through open banking because I can either access preferential rates or I can go through a process more quickly, well, that's great, isn't it? There's a clear value exchange. I think in collections and recoveries, that's less obvious, because I think, where customers are obviously wanting to use open banking for things like maximizing their disposable income or money management, reducing their bills, that doesn't just focus on that particular debt, that's focused on their lifestyle. And I think when you've got companies, if you've got debt purchase or DCAs that are advertising open banking, the benefits will generally be quite clearly on the business side rather than the customers. I think it's difficult to make that a very clear selling point, and that I think is just going to be one of the ongoing challenges we need to work on, because I think there's absolute merit and value in open banking and collections.
I think you're spot on, Gareth. It's about value proposition for the customer from the outset. We actually go live with our own open banking pilot, Hoist Finance, in the UK this week. Wow. I'd share your comments, Colin, in terms of uptake of this. Open banking is still a very sparsely used use application and facility. But for us, the value proposition lies not in telling the customer what your income and expenditure is from open banking. Most of our customers already know I don't earn enough and I spend too much. I don't need open banking to tell me that. I'm skint at the end of every month. I know that. So we've looked at it from a value proposition perspective of saying to the customer, okay, for you doing this, what we will do is how we use that information for you. So we've partnered with a company called Ariser, making use of a product that they have called DebtSense, which then uses the open banking information to provide the customer with a suite of solutions. Now, that solution could be in the form of switching of utility bills. It could be in the sense of identifying what I refer to as of black holes in your expenses of, although it was only £3.50 on a coffee from Costa, what felt like once or twice a week, it suddenly added up to £120 in a month. Wow. But also partnering with companies such as Entitled To, which is a benefit checking service, which by using the open banking data and with some other tailored personal information, looking to identify if a customer is applicable for further governmental support. And I think with the challenges and complexities that lie around things such as universal credit that we're all very aware of, and the constantly changing financial ecosystem at the moment, being able to provide customers with a solution to a problem. I think it's a fair step to say that customers who are our customers who are in debt clearly struggle with that financial management part. So be provided with solution is a good first step for them to hopefully entice them enough to embark on the journey. And that's all our KPIs are at the moment for this first pilot. We're looking at journey embarkation. Will people want to do this? Before we then look at how can we better use any income and expenditure data we've pulled out of it ourselves to fold that back in to help us form a better picture of customer profile. But at the moment, it's just providing it as a free service from the logged out space on our portal to say to customers, if you want to know more, look where you can save, please use this free of charge. This one's on us. And if we can't get uptake from that, this thing's not going to fly, because there's every step of the way we're telling them we're not using your data, you're not sharing it with us, don't panic. Because that's the other side of this, isn't it? We're seen as the big bad wolf. Why would I share my affordability data with a debt collector? All you guys are going to do is beat me over the head with this stick now that you know that I can afford more. So it's getting the value prop at the beginning right, then fostering the right trust relationship. Get both of those right, it's got a chance.
I think being totally transparent is a key, isn't it? Across digital journeys, being totally upfront with the customer, what you can expect from the next few steps you will take, what will you expect from this journey, and create no surprises. This is the data we'll be using, and this is what we'll be using it for.
Completely.
And I think
just to use it to populate a standard financial statement, just to populate an INE, for me, that's no benefit for a customer.
Well, it isn't unless you start talking about the flexibility within repayment plans.
Maybe.
Which is where I think there is a clear benefit to customers and a clear benefit to businesses as well. I think one of the restrictions in place at the moment, the 90-day consent rule, is really going to, I guess, limit how impactful that new process could be. So I think from an open banking perspective, I know it's in its infancy, but things like that I think are going to have to change, where you have, active customer consent periods. I'll give you access for 12 months because I know you're going to manage this plan for 12 months, up and down within guardrails, and I don't really need to do anything about it because you're going to manage that for me. But I think the sort of 3-month restriction is probably not going to work.
To loop back what we were talking about before about flexible customer solution, from what you've said there, Gareth, it does kind of allude to that, doesn't it? It's saying to a customer, set an arrangement amount between these two guardrails. And you know what we'll do is we'll flex your payment depending on what's happening to you financially at any given time, giving you the best opportunity to make the payment at the bottom rate and giving you the best opportunity to pay your debt off as quickly as possible at the top rate. But don't panic. There as guardrails well within your affordability. And we're just going to flex it by dipping into your bank account at the right time and judging what we think is best for you to afford. And I know that's very aspirational. And we're 2-3 years away from that. Well, I think we have to be aspirational.
I don't think we're that far away, but I think we have to be aspirational, don't we? This is where we've got to move.
No, I agree.
It's exciting.
It's the new times. So also we've got a couple of incoming questions for you both if you're up for the challenge. So
As long as they're easy ones.
Yeah, let's hope
Date
so.
of birth.
Yeah. So I was gonna, here we go. So it says, what impact do you think artificial intelligence and machine learning could have on digital collections in the future? Any thoughts on that?
I think it's missing. I think that question misses a key step, and that's step one, which is RPA, which is robotic process automation.
Okay, yeah.
And I think for me, that's the first step that collection businesses should take, because that's a great OPEX saver. If you can use RPA to manage things such as accurately processing your inbound customer comms, extracting key data from documents, data scraping from customer online engagement. If you can get that right, because these are all activities at the moment in our businesses are manned by human beings, remove that, you save cost savings. Machine learning is about how much data we can get on our customers. It's completely data dependent. And if we can't get enough to allow us to form the right models to then drive the machine learning, any assumptions or learning that is made is going to be flawed. But I think that such an activity does have a big part to play in the improvement of contact strategies. When, how, by what method to contact people, personalization. I think AI, is it not over-engineering a solution, I'd say at this point? I think you have to look at investment versus reward, and do we need it? I think often people confuse the line between machine learning and artificial intelligence.
Yeah, we see that a lot.
And I think machine learning will give most operationals as much as they would need before they then start moving into the very advanced world of AI.
Yeah, no, good. And then,
sorry,
Gareth.
I was going to say,
apologies.
I think it's a good question. I think we've seen an acceleration in adoption, but I think AI, ML will really help accelerate the effectiveness, because clearly, as digital as a channel, I can remember where there was maybe one person in a business looked after digital. You now have teams looking after digital. I mean, it's a rarity, but you do, because it's a channel that has huge value. And as a result, you've got to make sure that you're getting the most effective results and, optimum solutions. So things like split tests, where in the past you might run a test and say, well, let's see in 3 months what the best way of presenting X, Y, and Z pages to a customer. Well, I think with artificial intelligence and machine learning, you can accelerate those learnings. So you can have live learnings in its extreme, where you actually offer up pages whilst the customer's on a page. You can offer up different messaging and content dynamically based on the way they interact, but also learning about the best content, as you were saying, Matt, the best channel, the most appropriate tone, all of those things you can adapt much more quickly and rapidly.
Definitely.
And as we talked about, there'll be new demographics of customers that are using digital solutions. And that means we need to learn even more quickly. And as you have a much bigger and bigger population of customers using a channel, we can't sit back and just let it sort of every 3 months have a step forward and improve. We've got to be evolving that really quickly and really dynamically. So I think, AI and ML will, have a massive part to play in increasing the effectiveness of digital.
But I think if you're going to do that, you need to massively enhance your ability to consume customer data. Because that underpins all of this. Google, Amazon do this because every opportunity, Tesco Club Card, every opportunity they get customer data. And at the moment, as an industry, are we good enough of really truly understanding our customers?
Yeah. That's about learning from other sectors, isn't it? I think that's where we're kind of coming back to again, is learning about how advanced they are in terms of using their technology and data and things like that. So that's great. That's great.
Yeah.
So one more question as well. I think we've just about got time. So do you think technology and data can help identify the won't pays and the can't pays in the future? Does that make sense? Any thoughts on that?
Yeah, I think can't pays and won't pays, I guess they're phrases that have been used for a long while. I mean, as long as I can remember in collections. I think it's probably important to acknowledge that those categories largely may not exist in the future, because I think what we said before, there is subtleties that will exist. So putting someone into a can't pay and a won't pay, I think, is probably going to move a little bit. And I think personalization is now what we're seeing. I need to feel that I am getting a personal journey. I'm not getting the same experience that 10,000 other people get. So I think just as I suppose a summary comment, I think, historically having those categories will probably move away. And in terms of, technology helping to identify what the new categories are, I think we've covered a few of the areas in terms of, whether it's machine learning or just having a much bigger focus on digital outcomes and digital, how good digital journeys are at providing solutions, I think is where we'll move.
Yeah, I echo much of what Gareth said. I suppose in my head, it's more about will engage, won't engage, rather than will pay, won't pay, because that's the first step, that's engagement. And I think technology, as I said before, I think technology provides you the most frictionless way to engage with your customer base, the way that they feel is least intrusive. And the minute that you build that pathway to engagement, once you start fostering that relationship, opening the door to establishing a payment arrangement becomes even more easier. And then once you've opened that door is to offer, and I've said it before, that suite of flexible solutions. If you do all of those things and encourage a customer to manage the account, as I said before as well, suddenly the won't pay, will pay is irrelevant. It's keeping them engaged and allowing them to manage, because sometimes they will be paying to manage. Other times they may be taking a break, but they're taking a break because they're equally managing the situation. It's keeping the dialogue open and the engagement positive so that the situation is managed.
Yeah, great. That's great. Excellent. Well, thank you both for your thoughts on that. It's really great.
No problem.
We're just running a bit short on time now, so that's really brilliant. We're just going to move on now, if that's all right for both of you guys. We're going to we're going to announce the shortlist this year for this year's Credit and Collections Technology Awards. For any of you unfamiliar to it, we've got a tab on where it says resources. Have a quick look on that. We've got a dedicated Credit and Collections Technology Awards website, so we get lots of industry judges to have a look at that. So we're just going to put the list up now, and so this year we've got over 105 finalists from 84 companies, which is really good. Pretty similar to previous years, which is good considering we've had furlough and stuff. So this is the kind of the categories that we have: lender and creditor categories, so that's good. Lots of names in there. I think you mentioned a company called Horizon, Matt, so I think they're shortlisted in this next area. Maybe not. It's not this one. So this one's credit and collections categories. Okay. So lots of names on there. We're going to put this list on the website shortly as well, so people can see that. Yeah, so they've been shortlisted for Freedom Finance in a customer engagement solution. So yeah, they're doing something right, as well as working with yourself by the sound of it, which is great. Some more credit and collections categories here, as you can see. Content center solution, compliance, affordability. So a lot of names in there, a couple of familiar names that hopefully people are familiar with in the industry. Innovation leaders. So within that we have a technology team of the year, innovation person of the year as well, who's been nominated and then judged as well. Again, on our website you can see a full list of judges on there. I'm not going to read all of these out because I'm not sure of some of the pronunciations as well, but there's some names in the innovation leaders. And then the final kind of block of categories, if you like, is the applied technology. And I think, Gareth, you entered this year, so fortunately it looks like you're shortlisted. Congratulations. This would have been an awkward webinar if you hadn't been.
It would have been very awkward, yeah.
You have to just dial off.
Yeah, exactly. Gareth's gone. Where you gone, Gareth?
So, that's great. No, good. Thank you.
No, good. So with Wright Hassel as well, well known in the industry. So that's brilliant. So congratulations to all of our finalists. As I say, we're going to in the next. Well, give me a chance to recover from this webinar. We'll get that up on the website shortly. We'll hopefully everybody's pleased with their outcome this year in terms of being shortlisted. So so that's all. Unfortunately, all we've got time for today. Obviously, I'd like to thank Gareth and Matt for their brilliant insight. Really interesting. Great to hear some other discussions. Hopefully, it'll lead to other stuff down the line. So that's really good, and it's certainly given me some good takeaways in terms of the awards as well for next year and categories and some of the things we look at for that. And we're looking to make this Connected News a regular thing. Alongside some other events. So we've got coming up on September the 24th, we've got an event called the Online Collections Technology Think Tank. So with that, it's going to be 4 versions of these kind of chats, but focused in on different areas. So we've got a session on customer engagement, a session on vulnerable customer and affordability, all related to technology. And then we're going to have a section on open banking. So if people have a look at our resource tab, there's a little link there. You can click in and have a look at that and sign up. Hopefully, it's free to attend. We've got some great names speaking in there. We've got people from RateSetter, Southwark Council, and a company called Snap Finance, who are kind of well in the kind of the short-term high street kind of retail areas at the minute. And we've got some interesting kind of, not case studies, but chats that we're going to have like this, where we'll really go through some of the nitty-gritty behind that. So we hope to announce the full speaker list really shortly, within the next week. So I'm going to end now by thanking Gareth and Matt. Thank you so much for your time today.
You're very welcome.
Thanks for inviting us.
Thank you.
And I think you run a coffee morning, don't you, Gareth? I'll give you a chance to plug that if you want.
Yeah, it's Tuesday mornings, 10:30. Just message me on LinkedIn if you'd like to attend. Anyone from collections operations, we're very supportive and friendly group, and it's just half an hour, and I think people have found it, really valuable. So you'd be welcome to join. But get in touch. Brilliant, excellent. So we're end today, hopefully we'll see more of you in the future. Thanks for everybody tuning in. We'll see you more in the future for some of our other events. So thanks a lot and goodbye. Thank you.
Cheers, guys. Thanks.